We're taking a look at oil, which, of course, we've been talking about rebounding after that very sharp sell-off, Mike, on Friday.
Yeah, David, I mean, bouncing today, as you would expect. It's really an exaggerated version of what the overall market's been looking at. If you look at different ways to kind of capture the energy space, USO basically tracks crude oil. This is since October 3rd when crude oil prices peaked. So you see the USO down 30% right now. Interestingly, the overall energy sector of the S&P 500 down about half as much, about 15%. And then you have the real kind of whip end of the business, which is the oil services ETF, down 27% since October 3rd, almost as much as crude oil itself. It's interesting because the energy majors that dominate the XLE are not as sensitive to crude oil swings. Obviously, we had a big natural gas rally in the interim, and essentially are big kind of dividend cash cow type stocks. But the OIH is the one to look at in terms of expectations for drilling. One small point, which is in the last couple of weeks, the oil futures market has gone back to where the further out months are trading at a premium. So it's more suggesting a near-term supply issue we really have to get through with Iran coming on and everything else. And then after that, perhaps stabilization. And that's kind of how the energy majors tend to trade. So you can't kind of sound any kind of an all clear, but it is suggesting that at least when it comes to the major energy stocks, maybe the worst is over in terms of what they're likely to see in terms of longer term impact to the commodity prices, at least.
Yeah, I saw some numbers that over the past month, if you just looked at mega caps and the biggest drawdowns, you got your Apples and your Facebooks, but Exxon's in the bottom, in the top five.
Oh, Exxon is right there. Obviously, 15% in a month and a half is a tremendous loss. So it's not to minimize it, but just to say that relative to what crude has done on a year-to-date basis, I think it's down 10% or something, the XLE, which is pretty significant in a flat S&P right now.
All right.
Thanks, Mike.